calculate gross income with adjustments. What does this mean and how do we do it? Well, first of all, we're talking about basically taxes, right? So adjusted gross income is found by taking your gross income. So this is how much you earn at your job before taxes are taken out. And then we subtract the adjustments. And you might be saying, well, what are adjustments? Well, let me tell you, there's a whole list of them. Educator expenses, student loan interest, self-employed taxes, a whole lot of different things. You can look them up online. But the big thing to note is that adjustments are not the same as deductions. So these are both things that you hear about when you're paying taxes, and they both help lower the amount of taxes you pay, but they're very different. So here's the deal. You have your gross income. We take those things that are classified as adjustments and we subtract them to get your adjusted gross income, or your AGI. Now, after the AGI is calculated, then we subtract deductions. But here's the thing. There is often what we call a standard deduction. So there's that for singles, for couples, all of those kind of things. So in 2018, the standard deduction was $12,000. If your deductions, right? So when you do things at charities, if you have a home office, these things are deductions. So you would add up all of your deductions, right? Add them all together. If they were more than $12,000, then you would itemize because you would have more taken off to create your taxable income. However, if when you add all of your deductions together, it's less than the standard deduction, then they apply the standard deduction. Okay, but that gets into deductions, and today we are just focusing on adjustments. So we want to take our gross income, subtract the adjustments to get our adjusted gross income. And let's do an example. A single taxpayer has the following to give a tax preparer, or you could do it yourself, but I'm a big fan of paying a professional. So we have a gross income of $42,890. And there are four things that we have. We have taxes, which are a deduction for $1,934. We have student loan interest, $3,480. That's an adjustment. We also gave some donations to local charities for a total of $600 as a deduction, and another adjustment of educator expenses for $460. So now we want to calculate the taxpayer's adjusted gross income, or as we like to call it, the AGI. So first we just say deductions are not part of calculating the AGI. So let's just get rid of those. We only care about the adjustments. So I know that my total adjustments are found by taking $3,480 plus $460. So now I know my total adjustments are $3,940. So remember from an earlier slide, to find our gross, goodness gracious, adjusted gross income starts with an A. So adjusted gross income equals our gross income minus our adjustments. So to find my AGI, I take my $42,890, my gross income from line 1, and I subtract my total adjustments of $3,940. When I do that subtraction, I come up with an adjusted gross income of $38,950. So from there, we would deal with deductions, then we would have our taxable income, and then we would calculate how much taxes we owe. And that, my friends, is just the beginning of paying taxes. Thank you.